In today's video, we are covering absolutely everything from the short-term charts to the weekly and macro charts, overarching narratives, the weekly momentum shifts, and of course the total cryptocurrency market cap. We'll also be discussing the impact future economic decisions may have on the cryptocurrency market and why that is so important. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are doing a macro and short-term momentum analysis as well as discussing the weekly, daily, and of course short-term ranges. We are going over exactly what needs to happen for the buyers to continue to absorb the selling pressure and push the price upwards, the total cryptocurrency market cap, and so much more. By the end of today's video, you will have a detailed understanding of what exactly is occurring with the charts, where Bitcoin is more likely to move to, and the macro consequences of directional high time frame breaks. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us on VIP by doing so by clicking the pinned comment of the free channel. Click my name for more information. The trading track record link, which is a 50+ month detailed breakdown of all the trades we have taken in VIP, including access to that second link, which is a 10-minute video showing you inside the channel. You'll get access to trading setups with the exact entries, targets, and stop losses, as well as access to our exclusive 700 member group chat with multiple different channels, as you can see here on the left. Go ahead and check it out, guys, and we'll see you in the channel. Let's dive on in. So as we can see over the past 24 hours, we haven't seen all that much happen on the higher time frame. Bitcoin, of course, was able to sustain within that weekly range as discussed in yesterday's video. We also discussed in yesterday's video the significance of the breakdown of that 62.09 level on the RSI. I highly recommend checking that video out if you have not already, as well as writing a description to emphasize why this is important and how much weight we should be applying to it. We discussed what potential macro consequence there is for directional breakdowns of that 62.09 and what we have seen historically over the past 10 years as a consequence. And the general consensus is when we break 62.09, we do see a correction of 10% or greater more often than not, but not always. Of course, we also mentioned in our prior video, for us to be confident that we are going to see corrections from here, we need to see more than just the RSI. The RSI is just one data point. One data point is not enough to confirm directional continuations. We have to watch for not only the momentum, which is an indication of strength, but the structure and the trend as well. And at the moment, we are currently in a neutral consolidation, a structure being a horizontal consolidation above our 88 to 92,000 lows, which is our high time frame support. And while we are able to sustain within this region, the longer this region goes and the more we see this selling pressure absorb, the greater the probability of continuations higher. We are going into massive detail today discussing why we are still cautiously optimistic for the future, what would need to occur for us to turn completely bearish, and what our targets are. Of course, we're going over the macro, the short term, okay? We're going over the total, we're going over everything you need. So let's get started with the data. Taking a look at 24-hour data over here, 24-hour liquidation data is down 31%, 154 million over here. Pretty evenly split, 71 on the long side, 83 on the short side, telling us already that over the past 24 hours, we have seen quite a fair bit of chop. Looking at the volume, up 9% at 155 billion. Not very high for the beginning of the week. Moving over to the DXY, the DXY is still ranging above our weekly highs over here. This, of course, is going to be our horizontal level of support. This is a yearly level of support over here. A break below this region would result in a strong correction for the DXY. This would be considered bullish for risk assets, whereas a break over our prior weekly high would be considered bearish for risk assets with an expected directional continuation potentially as high as 114. What will determine where the DXY goes is going to be heavily influenced by the upcoming economic news, specifically looking at our CPI data. This is going to be in around about 48 hours, a little bit less, around 36 hours-ish. It's 11:30 p.m. tomorrow night. So at the moment, it is 10:15 a.m. for my time. That is around about 30-ish hours, 36 hours until the news. Again, we can see already that the previous came in at 0.2 and is already being forecasted for that month to come in a little bit higher at 0.3. This means if we do come in at around the previous, this is going to be considered bullish. Anything under the forecast and under the consensus will result in, of course, a bullish result and potentially reduce the perceived systematic risk in the market, resulting in a rally for the cryptocurrency market moving into the next interest rate decision. So we do have to pay very close attention to that. Of course, if we do see that data come out on consensus, we could see the DXY rally and the risk asset market pullback. So that is going to be very important. We have to pay close attention to that tomorrow. Moving over, guys, let's take a look at the S&P 500 again. Overall expectations are the same. For us to expect continuations toward the upside for the S&P 500, we need to see this downtrend break. When this RSI trendline breaks, we are then going to be targeting for continuations higher. If you have been following the channel, you would know simply I turned macro bullish on the S&P 500 upon breaking out at 4,200 all the way back in May 2023. My target was 6,000. I remained bullish every single day, every single video for about a year and a half, telling you target 6,000. We hit 6,000 around mid-December. We have been short-term bearish, but cautiously optimistic since. We are waiting for momentum to flip positive to suggest this rally will continue, and if it does not do so, we could see corrections, hence why we are cautiously optimistic. But for us to be confident in continuations, watching that RSI for a breakout. Let's move over to the broader markets, guys. Now, before we get into the rest of the content, there is so much to be taking a look at today. Make sure to hit that subscribe button, guys. And of course, if you are interested in 15 to 45% of all your trading fees, you can sign up to BitGet, BitUnix, or BingX with the links down below. That will give you that exclusive discount on your trading fees. You'll support me making the content and you'll support yourself in your trading journey. Check it out. We'll be right back for the video. See you in a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back in. So we are starting by taking a look at that weekly RSI. Now, I do want to bring this up very briefly because we did do an extensive analysis on this yesterday. Simply, the overall arching narrative in yesterday's video was a breakdown of the 62.09 in the RSI historically, based on historical data, has signified a larger probability that we see a weekly correction. Now, this isn't my personal view. I do not believe we will likely see this. This isn't what I think is going to happen. This is simply a reflection of what we have seen historically, and I've shown you that data. If we take a deeper breakdown, we can say 12 out of the last 15 times in the last 11-year period, we have seen a breakdown on the RSI. We saw a correction of 5% or greater. 9 out of the 15 times was 10% or greater. 7 out of 15 times was 20% or greater. 5 out of 15 times was 50% or greater. And 3 out of the last 15 times we saw a break of the 62.09 from the top side down. We did not see corrections. Again, as we've stated, this does not guarantee we are going to see a correction. Of course, we need to see higher timeframe structural confirmation to confirm that. But what it really is suggesting, what this really goes to suggest, is momentum is beginning to die off. Now we can see this already with something like the MACD. Now I've had a few people comment about the MACD. This is an indicator I personally even trade with. Actually, I don't really like the MACD that much. I prefer other momentum indicators. I find the MACD quite lagging. As we can see here, we are already starting to see a crossover, which is a bearish crossover on the MACD. We can see momentum going from increasingly bullish, which is the larger and thick green candles, to our light shade of green, which is decreasingly bullish, now flipping into bearish momentum. So we can see as we are having that MACD cross, we are losing to 62.09. And what does this really go to show? It goes to show that momentum is now starting to flip bearish on the weekly chart. Now this is of course lagging in comparison to something like the daily and the shorter time frames which we're discussing, which is why we need higher time frame confirmation. Moving over to our current charts, this is where we can kind of link it all together. We know that the weekly momentum is beginning to turn bearish, and that is expected, and this is why we need to contextualize what is happening. When we see explosive moves after long periods of consolidation followed by direct consolidation, the momentum will always flip negative on the weekly as a consequence to the change, okay? The change in volatility between our explosive phase and our consolidation phase. If we had to map that out on some sort of graph or curve, we would have something like this: an exponential increase followed by a sharp or slow and steady decrease in volatility, which can be confused as weakness. So this consolidation here after a long explosive rally is generally going to result in a downtrend in momentum, which if extends for many weeks, which we are seeing, will eventually start to indicate the weekly chart momentum is starting to turn negative, which we are now seeing, but doesn't necessarily mean that this is bearish, as again, exhaustion in momentum is not always an indication of weakness if the momentum is also representing absorption. So at the moment, we have not got an indication of strong absorption, but we are still sitting above our horizontal supports, so we can neither confirm this exhaustion as high time frame weakness, which can develop into macro consolidation continuations lower. And that brings us to the predicament, which is the reality of us being in a horizontal consolidation, which is by definition a zone of indecision, right? This is a period of indecision which has been brought upon by the changes in monetary policy surrounding future interest rate reductions as a consequence to the Federal Reserve shifting narrative in December's 2024 meeting. Since the December 2024 meeting, the expectations was 5 interest rate reductions. That has been moved down to 2, and now it has been moved to a more ambiguous number, which can change based on the future expectations and actual results from stuff like CPI, NFP, unemployment, all these kind of economic news events. So with that uncertainty around future monetary policy, we see uncertainty in the charts and we see horizontal consolidation. So there's a lot of people in the comments saying, oh, Whale, you're not saying anything. Oh, Whale, we want to know if it's going up or down. The reality is the market doesn't work like that. And anyone who understands technical analysis and understands what really drives the market will understand periods of indecision and consolidation is a reality. And when you're looking at the charts and you see this, doesn't mean that you don't know what you're doing. If you're able to identify these ranges, you are able to position yourself or manage your risk or allocate your capital in ways where you do not suffer drawdowns as a consequence of indecision, particularly indecision spurred on by monetary policy. And that indecision in the risk asset market, particularly in cryptocurrency, results in money flowing into more steady and more perceived to be stable forms of crypto, such as Bitcoin, and away from speculative assets in the cryptocurrency market, such as altcoins, which is why we saw Bitcoin dominance rise, which is why I sold all my altcoins. And it's strange to me why people still yap in the comment section saying blah, 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 blah. The reality is this is what's happening, and you can take that information and you can utilize that information, or you can contest that information and be wrong for 30 days out of the month until you see one green candle. The reality is, guys, we are in consolidation. We have to be cautious but optimistic. Again, cautious because momentum is starting to turn negative. We are seeing that exhaustion develop. We have not yet seen that absorption take place, which would indicate the buyers have regained control. but optimistic because our horizontal consolidation is not a bearish structure and we are sitting above high time frame support with a future potential for monetary policy to shift in favor of risk asset growth. And that is how I could summarize everything. If you just listen to that paragraph I just reeled out to you, if you want an overarching narrative and summary of what I expect and what I'm thinking, that is quite literally it. So let's take a look at the charts, because we've been yapping on now for a bit. Let's take a look at the charts. What do we need to see for momentum to positive? What do we need to see to be confident in continuations, and where will those targets be? Let's start on the weekly. First and foremost, the weekly range between the horizontal black lines. A weekly candle close below or above these black lines would validate a weekly directional break. And most importantly, it would tell us that at the moment of which that weekly close occurred, that would be a close larger or less than the weekly range we have been in for the last 2 months. That would be an outlier part of data, piece of data. And that would generally, in our eyes, consider the continuation towards the daily range. The daily range being the red and red lower lines. A continuation into the daily ranges, of course, is not of macro significance, but a break of our daily ranges is of macro significance, because breaking the daily range low and the daily range high can result in moves into our low historical resistance range toward the downside and our price discovery range toward the upside. A break into a low historical resistance range and or price discovery, which are essentially the same thing, we see mass increases in volatility. You don't have to take my word for that. You can look at prior price action. This is an example of the price entering a low historical resistance range on the macro chart. Another macro example of that would be this move over here. Again, the price entering a low historical resistance range on the macro chart. Significant surges in volatility, which often result in price sustaining. So this is very important. We actually see these directional breaks, hopefully in favor of the buyers. If we see the breakdown, that of course will then go to validate the weekly momentum shift toward the downside, and will tell us that over the course of the 2-month period, the support was not able to sustain and the price has dropped below. This would tell us that the market does not deem this asset to be worth this price, and we'll be expecting to see the price correct lower. Now, if we take a overarching philosophical look at this price action and this support, we could almost say that until the market sees a dramatic shift in the expectations surrounding monetary policy, it would be unexpected to assume that the buyers that are holding demand at this level of support would change tune and the market would expect to see corrections. So that does go to emphasize the significance of, again, the upcoming interest rate decisions and the overarching developments towards that interest rate decision based on current and developing economic data. So we need to pay very close attention there. Remember, buyers and sellers are holding the price for there is real buyers and sellers, real money moving into the market. It's not just random numbers. It is actually people clicking buy and sell that holds the price where it is. So for those people to then decide to sell and for a massive amount of selling to occur, we need to see a dramatic shift in the narrative surrounding cryptocurrency and Bitcoin, which will be likely pushed through the risk asset market as a consequence through rate changes. Let's move over to the rest of the charts. The short-term price action, we are starting to see some good signs. Now, this is good. We are seeing a momentum shift on the 4-hour. We have got our 4-hourly downtrend here. We have got our retest of this level, and we have now seen a momentum shift. This means the probability for us to continue into our next resistance at 99 to 100,000, potentially to retest this downtrend, has increased significantly over the probability of corrections underneath and into 92,000. This means we are expecting on the short term, potentially moving into the rest of this week, we are expecting the market to see some sort of short-term recovery. We are expecting to see the market rally to 100, maybe to 101, maybe to 102,000 over the coming days, provided momentum can sustain positive and provided the price can hold the POC. If we drop below the POC at 96.8k, we will then see a correction back into these lows, but provided we hold 96.8k, which if we zoom back to the hourly chart, you would note to be this horizontal area of support. Again, we can see we retested this region. We are now bouncing again. Provided this area holds as support, we expect continuations. If we lose this area of support, we expect corrections. That is how we're playing it. At the moment, we are putting a greater probability towards continuations. That is what we are expecting as the momentum has flipped positive. Okay, that is it, guys. I don't want to get into much more. I want to go over one final thing and then leave the video with you guys to enjoy and watch. The last thing is the weekly. Now, this is the weekly total market cap, the most important chart in my opinion. While we've sustained above the 2021 high, we are expecting cryptocurrency to be bullish and we are expecting continuations higher. There are warning signs, such as the daily bearish divergence. There are definitely warning signs here we need to be aware of. Now, again, if you're entering crypto for the first time up over here, you are simply late. There is nothing more to say. You are late to the market. I'm not going to talk about what we did because, we did so much stuff down over here. We're telling you guys for months, the bottom was at 16K, the bottom was at 18K, but it doesn't really matter. The fact of the matter is if you're entering up over here, you are on the later end of this rally, even if you look at the 4-year cycle. Here's the 4-year cycle here. Even if you were looking at the 4-year cycle and expecting the 4-year cycle to play out, we are basically a little bit more than halfway through that bullish phase of the 4-year cycle. So you are not early to the market. So there is a chance we do start to see these corrections. You have to be aware of that. Thanks for tuning in, guys. Have a fantastic day. Catch you in the next video on Thursday. That'll be after the CPI data. Cheers.